Good morning, traders. If you like my video, like it and on the YouTube channel and comments below. If you guys are seeing some good opportunities this week, bullish or bearish, what you're looking at, post the tickers below and some comments or something, and give us all who's watching my stream the opportunity to look at what you're looking at. Appreciate any feedback you give. Okay, guys. So I'm going to recap the two trades I did Friday. One was early on Friday morning. I took a Microsoft short under the theory that we had very strong internals out of the gate. I was looking for a fade in the internals, a potential blow off move on the open. Okay. And what we were doing, we were looking right above the all-time highs on the open. Okay. These prior all-time highs, we were looking right above that. Okay. And I was looking for a fade and possibly closing back below those prior all-time highs on Microsoft. That was my theory. The reason I was taking this trade, you see the weekly, the yearly uh, uh, volume profile there. See how it gets really thin right through there? So we're getting in on the area to where you have a lot of exhaustion. Okay, the volume, you can push a lot higher, but you can see a lot of exhaustion in the volume, and prices can go higher on very light volume. But I was looking at the basically the 462.50 area is actually where the highest point ever on the weekly time frame that we actually saw volume coming in 462.50. And then I also went down to the 4 hour here. Okay, and I was just looking at how this is playing out. We're right above this. A major all-time high. I was looking for a potential fail, going back in for the back test down here, and that would have put us back down to the 463. So that was my theory, that I was looking for a possible move back to 463, a double top rejection of Microsoft, which it ultimately didn't work out. What I did do, I got in, okay? It came down, I was in the green for a bit, and I was a fairly light position on it, and I was looking for a move down to 463. And instead of coming down, we saw wicking action and it came back up. So I tightened my stop up. It ultimately lost $200 on the trade. Okay. Not a biggie. Okay. And ultimately went up to right above my Fibonacci. Okay. And the 61.8 Fibonacci. And that's where it rejected and ultimately came down. And now we are trading, and we did come down in the Sunday night session, finding support there as well. The breakout is still very much valid. But some things I was looking at here going forward here on the monthly web. Okay, and so basically this breakout, they're trying to build a base for a move even higher. If this pattern does play out, the fibs suggest that we are making a move to 500. So we just want to keep that on the watch, a potential move all the way up to 500. So we're getting way up there on the road to 4 trillion on market cap on Microsoft as this thing goes higher and higher. So we definitely want to keep this one on watch. Okay. The other trade that I did make some money on, okay, and I still didn't go huge on this trade. Okay, and what I did, if I go over in 4 hours, and what I was looking at here on Meta, so we were at 702 whenever I got in short on Meta, thinking that this here represents the very first point of control that big money sellers came into Meta. So whenever Meta was in the correction mode, right here is where big money sellers accumulated and ultimately created this big down swoosh. Okay. So this is the untested point of control. The very first time it was ever tagged, the price point at which where big money sellers were coming into Meta. Okay. I was thinking, looking above that major point of control there, the odds were fairly good that big money sellers would once again, anybody who was long was looking to take profits, and there could be even another attempt of big money sellers coming back into the name. Okay, so what I did here, I was shorting at 702. So I got a fairly good entry point. Okay. And it came down, but it didn't come down as far as I wanted it to. Okay. It came down to, I don't know, early on in the session to 697 or something like that, and then found some buyers, some support. Uh, I went ahead and took by 10 o'clock, I went and took my profits, made over $1,000, something like $1,000 or something like that on that trade before it finally came up and would have actually went negative on me if I had held the trade. And then ultimately it came back, the back test. This was what I was actually looking for, is the back test of this prior high. That was ideally what I was looking for whenever I entered the trade up here at 702. Okay. I was looking for that back test, these prior high back tests to exit the trade, making that close to 100% trade if I would have stuck it out. Okay. And well, it ultimately did what I wanted it to do. It just was chop fest. And, we had the breath for most of the afternoon, for a good part of the afternoon, fading, so helping support this trade. But ultimately, that's the way it goes. So, yeah, I made some money Friday, but I didn't get rich. Okay. As far as the indices go this morning, we'll start off with the Russell. Russell is breaking out. Heads up on that. So, so be very mindful of that, this consolidation. But we are into a 4-year resistance zone. Okay, this is a major resistance zone, the 4-year. I don't particularly want to short this. I'll go over down here on a smaller time frame. And what I'm looking at here, we're above, of that range, we're above the 60%. It looks like a continuation pattern. The 6160 area is probably going to be fairly heavy resistance. So between 60 and 6165, we're probably looking at some fairly heavy resistance in that area. And we're probably going to see it today. So I definitely want to float that idea that we're probably going to see 6160, 6165 in today's session. So let's see how it plays out today. I don't really want to be short of that. So let's see how that plays out as the day progresses this morning. Okay. The S's this morning, that is the strongest of the indices this morning. Some things that I'm looking at here on the ES's. We are fighting last week's highs this morning. So be mindful of that. We're right into these last week highs from, like I said, last week. And if you zoom in here, if I go over to my other chart here on ES's, let me find it here real quick here. I want to point out here, you see how we had this big explosion in Uval Devol, the very last. This was our breakout point right there. It was right around, I don't know, 5:30 or so, or 3:30. 3:30. So we had a big breath explosion into the markets the very end of the session last week. It happened about 3:30 in the afternoon. And I wanted to point out here, right, this candle, that red candle right there, that is our, we closed down here. So we're currently trading right above that breakout area. So, I really wouldn't want to be net short this market unless we start losing this this candle right here. This candle right here starts becoming new resistance. So that would be 6,000, below 6,006, basically. I wouldn't want to be pushing the short until we do that. That would suggest that we're going to reject last week's highs early on in the session. Right now, we're trying to defend above it. Okay. So bottom line is, if you go short right below 6,006, you're short. As long as you're staying below 6,009, your short price still very much valid. Okay, so that gives you a 3-point window for your stop. If you were to try to see if they're going to take profits early in today's session. Okay, guys. So be very mindful of that. Let NQ. NQ is acting relatively weak this morning. So bottom line is we came up to resistance this Friday afternoon, and we're back testing it early on this morning. So this is actually a textbook bearish rejection scenario. So this is what you would think from a textbook standpoint, a potential rejections area for the NASDAQ. So be very mindful of that in today's session. We do have a little trend here. Let's see here. How do I want to draw this? Probably this here. That low right there. Put a little trend line on that. We violated it once, but no. It's kind of what I'm looking at here on the NASDAQ. You know, heads up on that. See how that plays out this morning. See if we get any continuation to the downside here on the NASDAQ. See if that plays out. Okay. We are below last week's high as well. So heads up on that. So Friday we went into last week's highs and we rejected. We haven't even got back to last week's highs so far in the pre-market here. So something to think about going forward here. And then that's the main things I'm thinking about this morning. We have a lot of charts and potential breakout scenarios, right into that major resistance areas. We could very well be just digesting sideways for a catalyst to break out. So just be very mindful of that as well as we go forward here. Let me see if I can get anything else I can tell you this morning. So some warnings if you're trying to short the market here, guys. Typically, 110 is your cross for the VIX. That's the volatility of the VIX. That's where fear really starts to ignite in the markets. And so we've definitely got to keep that in the back of our minds. This morning, the VIX might be opening above the Thursday lows. And so, that could indicate that we may be bottoming out down here on the volatility of the VIX. So this is probably one of the most important, suggesting if they're coming in looking for insurance in the markets, seeing if there's a bottoming process starting on the volatility of the VIX. So far, we're just putting lower highs in, lower lows. There's nothing here that just jumps out to me as saying, hey, this trend has changed at the current levels here. I would suggest, though, if we start breaking above this morning's highs, that, hey, there might be an opportunity to the short side, suggesting that they're starting to buy some insurance at this price point. So be very mindful of that. The VIX, we know for a fact we filled this major gap here. There are some gaps below here still, way down here in the 15s and 14s. I mean, we do still have some major gaps down here. And we do have the China-U.S. talks. They are underway. They're starting today. So we do have, and there's a lot of optimism that, hey, we're going to work out some deals between China starting today. So got to be careful here. A lot of people are optimistic about, these trade talks, and the way Trump has been buckling on these big tariff, being really strong about tariffs, and he's really buckled on a lot of things, and that's what Trump's all pissed off about. And it could be not nearly as, reducing the trade deficit with China as everybody thinks. I could definitely see Trump just trying to close the door with the China deal, make a China deal that's not nearly as advantageous as, so any type of closure there is probably going to be bullish to markets. So on the early pre-market volumes this morning, there was a lot of expectations that Robinhood was going to be added to the S&Ps and be announced last Friday. Well, guess what? It didn't happen. So Hood is down this morning on a negative reaction to that. So be mindful of that. This thing could be a short, as a lot of traders did not get their expectations. And with that being said, you have the ARK investment. It has a lot of Hood in it, so ARK is probably down as well, in my opinion. I can't remember. ARKK. Maybe not this morning. So it's up a little bit this morning. Let's definitely keep an eye on that ARK as well. But Hood is heavy weighting here in your ARK. So be mindful of that. Palantir's down a little bit this morning, just digesting sideways. We have the negotiations going on with China starting today. Might keep a bid under the Chinese names today. Other than that, I did want to point out here is ZBs. We had the big 10-year and 30-year auctions this week, with the uh, the very strong numbers there Friday. That was not conductive, inducive for lower interest rates. The data that came out Friday did not support lower interest rates. And so they pared back the recent move to the upside here in the bond markets, here in the ZBs and ZNs. Haven't broken down major support, but right here, right now, this back test is actually a potential bearish setup kicking off the session here on the ZBs. We're looking for a rejection for a move lower in the ZBs. Early on this morning, based on technical analysis, the ZNs, see if they're in a resistance here. ZNs are a little bit different. This is a potential buy zone for the ZNs. So the ZBs versus ZNs doing a little bit different. Different patterns here. So definitely keep an eye on that. Like I said, Wednesday, big deal, big day. Wednesday and Thursday, big days on these auctions. So we've had very light participation at these auctions. And bottom line is, I don't think participation, they might actually have improved in participation if there's a very reasonable deal between the U.S. and China announced before these auctions actually hit the wire. So let's definitely keep an eye on that. If we start seeing some really positive information out of U.S.-China negotiations, which doesn't sound like they sound like they've hit a stone wall. The Chinese just don't even want to negotiate very much because they are taking major market share in other parts of the world, offsetting a large portion of the losses here in the U.S. So the Trump policy is actually, I think, in many ways benefiting China more considerably. So they're not as getting hurt near as bad as what the administration's kind of was hoping for. Okay, guys. So just a few things I was thinking about here. Thanks for watching my video, and I will see you trading. Early on this morning, I don't see anything that I'm excited about. I mean, things are very quiet. Trying to short a dull market is a very difficult thing to do. So be very mindful of that going forward here. And a lot of times you will see the riskiest part of the market rally before you've seen this many times. The riskiest part of the market rally, like the Russell, before the auctions, and then sell off after the auctions. And that's kind of what we're seeing right here. So let's see how it plays out here going forward. So I just don't. I don't really want to be overly short the markets whenever I'm seeing uh, a rotation into the Russell. Okay, thanks a lot.